Hello, everybody. It's Tortoise Investing coming at you today with three famous clips of Warren Buffett. I am going to show off these little recordings of him and then give my thoughts on it and what he means by what he says. I feel like when it comes to anyone that's an investor, whether it be dividend, growth, any and all, listening to the people and hearing them out that have been there and done it through everything is always a great idea. Warren Buffett's to Peter Lynch's. Warren Buffett's got a 20% annual return over the past 60 years. So when the man speaks, I listen. So if you're new, hit that subscribe button. I'd greatly appreciate it. Drop a like, comment down below. All these things help out a ton. I greatly appreciate everyone's support. Now, without further ado, let's get into the videos.
All kinds of business. You can certainly understand Walmart. That doesn't mean whether you decide whether the price, what the price should be, but you understand Walmart. You can understand Costco. And if you get to something that your friend is buying or that everybody says a lot of money's going to be made in, you're not sure whether you understand it or not, you don't. You know, I mean, and it's better to be well within the circle than to be trying to tiptoe along the line. And you'll find plenty of things within the circle. I mean, it's not terrible to have a small circle of competence. I'd say my circle of competence is pretty small, but it's big enough. You know, I can find a few things. And
when it comes to investing, always invest in what you know, not what you think you know. Because what you know, you're going to be able to do the research on it. You're going to be able to understand it a lot better. Like, you don't have the best chess player in the world going up against, you know, LeBron James in basketball, and you don't have LeBron James in basketball going up against Magnus Carlsen or whatever his name is in chess. So stay in your circle of competence, invest in what you know, and it will help you out tremendously in the long run.
It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd, because this is not a business where you take polls. It's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
Now, when he says you don't have to be an expert, you don't have to be a Warren Buffett, you don't have to be a Peter Lynch when it comes to investing. Anyone who can do basic math and look at a chart and just understand, do a little bit of research, can do very well when it comes to the stock market and investing in general. Not financial advice, not guaranteeing any returns, but when it comes to investing, you don't have to be an expert. You don't have to have the knowledge of every fund manager in the world to do well. Again, just staying in your circle of competence will help you in the long run.
77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand it.
Now, I absolutely love what he says here about staying in your strike zone. And you don't have to just strike out when it comes to investing. You can wait for the opportunity to present itself to you. You don't have to sit there and just swing and swing and swing and let FOMO take over and let fear, uncertainty, and doubt drive your investing. You can wait for that perfect opportunity to hit in your 400, 300 strike zone and then jump in, because time is on your side. When it comes to investing, time is the main ingredient to success. Knowing when to jump in, when to wait, because like he said, there's no 3 strikeout rule when it comes to investing. Like, you can just wait for that opportunity to present itself. And sometimes it's better to wait than it is to just jump into something you don't know. You just seen some hype, something's rallied up 100%, and you have a fear of missing out on it. But I absolutely love what he said here about staying in your strike zone. It's so good. Too good. Anyways, guys, that's everything that I've got for you. I hope you enjoyed these. I absolutely love me some Warren Buffett research. And let me know down in the comment below what you thought about it. Until next time, I hope everyone takes care. See yous.